Good morning, my friends, and welcome to the Breakfast Club. Here we are, Thursday, December the 7th, 2023. What an interesting day. Well, last night, I guess it was, I woke up, as you do, can't sleep. I saw this thing happening, this consolidation. We dipped down, take out the lows, ran up, took out the highs, and came back down, cleaned out the lows one more time. Then we created this fair value gap here. I got in on a trade here, on that. Then it waffled around here. I was down on the 1 minute chart, and I was in this waffling frenzy in here, and I was just like, ugh, I can't handle this. So I ended up getting out of it. But this projection we pulled here was a 4-banger projection, just on that the leg that took out the low of the consolidation, that ran the lows out, created a swing above. You come back into it, and then look at this, and this is what it looks like now. Right on the beezer. So it was a perfect 4-banger. I saw it when it happened, but here's the interesting thing to put in your journal. You got to say, do you have the courage, and do you trust it enough to take it? And I didn't. My mind started racing. I had too many things going through my head, lots of doubts going on in my head, instead of just put the trade on, put my stop loss in, and walk away. And I woke up this morning, came back and seen a delicious bunch of profits. But as usual, I didn't. British pound, or I took a 500. Oh, here it is here. So I took this trade here, started getting this drawdown, panic in here. And then this one, I think I let this one run. I pulled the stop loss up relatively tight, let it run, and I only had it just sitting it here. I didn't go for the 4-banger on that one. British pound. Got in and out here. Yeah, this one was a huge drawdown, so I got out there. And I started taking something here, got out, didn't see anything of value in there, left that one on. So I was hoping that it would come up and run these highs out here, but it really hadn't broken any market structure to the upside that maybe warrant a higher run. So I ended up getting out of that, luckily, quite well. It just came back to an extreme discount. PD array, I guess technically that's above a swing point, so came all the way back down into that breaker's mean threshold you see there, and then came back up and cleaned the highs. That would have been a nice candle to take, but didn't take that one. So let's look at that. We're going through that thing now. It'll end up being a 5-banger. It'll end up coming up and taking out New York's PM session. That's E-mini S&P, so you take the big 50% of that range created from yesterday's high to this morning's low in London, or is it London's low? This morning's low in London, 50% of that range is right up here. So back into this consolidation here. So look for this plus potentially 62% for, if we're going to continue on the downside, just look for a run back up into this bigger range here. I think it was probably going to clean out these PM session from yesterday. 50% puts you back into this breaker here. Remember, it's non-farm payroll. You should be out by the end of the morning session, beginning of lunch session today. You should be out of your trades. NFP, not for professionals. We can watch it. Michael has an NFP trade day, but I highly recommend that you trade that as a demo account if you're going to play that one. Sorry, let me just double check and make sure we're still live here, that I'm not just talking to myself. There we be. No one's in yet. That's okay. So what are we looking for here? Let's go to the big three. Oh, I wanted to show you, let's go back to here. We'll work our way through the old MT5. Some of you guys work in MT5. If this order block holds, look for a run above these highs here for the next hour. We've had a run down to the, I guess technically a breaker here. We've had a run down to here into the mean threshold. We came back up, validated this order block, came back down to the top of that, and now we're looking for a run above these highs because we're through the mean threshold of the other candles. Looking for these equal highs here now, and then eventually start running up to the objective I was looking for early this morning. It looks like for here we have a reaction off of the monthly fair value gap. We've come down, tagged it, popped into it, opened, popped down into it, and now we're starting to drive back up again. We're above the daily fair value gap, monthly fair value gap. So if we do come back down into here, let's see what kind of price that gives us. This candle's low is 107.715. If we come back to that, find some support and leave from there, look for further upside. If we drive through it again, look for a run below these lows, and then we're going to start to dig back into this fair value gap here. Looks like we've just come down deep enough to hit this old high. And now that would be a nice place to react off of that, find some support on top of the daily fair value gap, and then start running back up. So today, if we just get a run back into this, a re-run on this price imbalance, that old fair value gap up here, we'll extend that a little bit. Look for a run right back into that. We didn't quite tag it last time, so look for a high of this today, potentially. High there, low there, inside that range, or return here, I should say. CAD. After the rate announcement yesterday, and they said they were going to hold it. That's 1 minute. Let's go to the 1 hour. Mean threshold. Look for the mean threshold of that order block there. Does that order block hold price, or are we going to continue through it? If we do, look at the rejection block. Right now, I'd say mean threshold, see how well that holds, and mean threshold to 136.031, and then see if we don't get another return back down into this relative equal lows here, this little consolidation. the fact that we had this kind of impulse leg above here, but really didn't take out the highs, took out the highs with a wick run, I'm kind of heavier on that, not really bullish on that. Japanese yen, right back to our weekly fair value gap that we outlined a while ago. So we have weekly highs still. Look at the weekly chart. This is the one that has those equal highs, and they are, from what I know, they're exactly the same height. So 151,909, 151,945. So this is still higher than this. We've run all the way back down into here. We called this weeks ago that you could run back into that fair value gap daily, or sorry, weekly, back to this order block. Equal highs. We're in it now. So if we run these lows out, get back into that fair value gap, look for price to hold in here, and then a run back up. If it just stops here on this, retail will believe that this is actually a floor, and then we should get some support on that. Look for a few days where you might run down in here just to fill this fair value gap on the sell side now. We have a busy buy side imbalance, sell side inefficiency. So if we run those stops, look for this to fill before returning back up. Or if we go sideways, it will eventually dip down in there before running back up. Australian dollar came back to these equal highs we had outlined here. Oops, see that little dip there? I'm just gonna readjust that just to make sure that that's there. I was gonna say, I didn't want you to think I was form fitting it just to get the lows. There, it's nice and even now. We're just short of tapping it here. This, because it's MT5, could be broker manipulation, but return to those equal highs is ideally where you want to be. And looking for this candle here. Looking for, there's a little fair value gap inside this. I guess it would be a breaker as a swing point. That candle right there, there's a breaker inside there if you go down to lower time frames. And look for this to fill and then roll over and either come back down. And we want to get a deeper retracement, I think, in December for the big run up in Australian dollar. So 50% puts us right into here. 62% puts us back into that inversion fair value gap, back into the old high of the consolidation. 79. Yeah, I'd like to see a deeper retracement, get into that 50%, get into a discount range before running out these highs up here. That's my objective for the new year. New Zealand dollar. New Zealand dollar is the stronger of the two. Hasn't quite come down into those equal highs yet. So it's just come back up into that order block that we talked about the Australian dollar doing. It's come back into that. We're having a bit of reaction. Now we're getting a reaction off of this side. So I would like to see this continue down through here, fill the rest of that fair value gap, and start getting back into these equal highs here. Oil, look at that. We called this weeks ago. We called for oil to get all the way down to $70. And ba-boom, hit it, and we closed below it. So what does that tell us? Well, if we hit that level, and you can go back through the recordings, you'll see that I put this one out there a long time ago. This was the market maker sell profile. We saw that quite simply. Accumulation, distribution, second level of accumulation, distribution, past the original consolidation. We're through the midpoint of that original consolidation. When you close, for me, if you close below the midpoint of that, then we're running for the lows, these equal lows here. So that's my next objective. On oil is down in here. So we'll look for first rejection block, so 67.30-ish. Look for that there. If we run these, then you'd hope to see that oil will take a run below those lows and start to make its little jump back up again into the higher prices into the new year. Gas, as painful as this is for me to look at, the gas is just poop the bed. We've run these lows out here now. So are we going to go down for lower lows, or are we just going to come back into this order block that we've hit here, this breaker, run above these highs? So I would like to see price get supported here. It's run the lows out now, so it's come back to accumulate a lot of longs, and we should see a turn here. Again, I'm not picking the bottom, but if that breaker holds, then great. If we lose the threshold, the main threshold of this order block, look for a run below these lows, take out this candle here, and making new lows. All right, let's go up here into Trading View. Okay. Trading View. We finally got into NASDAQ on the dailies, finally dipped down into that fair value gap we were calling last week, hoping that it would get back there. It's been really choppy, but it's made its little plunge into the pool, return to order block. This here breaker is what I'm looking for the return to, so that high right here. So it's the last up close candle on a swing before a run below lows, lows, lows. That's the initial one that starts that leg that breaks above that high, that starts that run down below all of this lot. So this here's the breaker. There's no other swing points in here on the way down for the daily side of things. So if you take that candle's high and we go 15,714 and we look for this candle's low, 15,721. So we are seven handles away from that high. If we go to this one here, 15,719, 15,714. No, 15,721. So we're still two above this guy. Midpoint of this. So if we pull your fib tool of your BISI right there, 15,717. That's your midpoint of that fair value gap. So you have quarters. If you break that up into quarters, we look at the 25, 50, 75%, and then the full fill. So we came down to the midpoint, expecting to come back up into this order block here. We've already wicked through it already, so that potentially doesn't have a lot of strength on my perspective. We're right into this candle's body. These guys are all inside that one. So I'd have to say the threshold of that, which is also that little 1 hour fair value gap that's sitting up there still. So we have perhaps a return to that, or a wick, 50% of this wick, and then a continuation on the downside yet again. See, we've got wicks on both sides that are quite significant, so I don't have a heavy pull or bias on NASDAQ yet. We'd have to get down to lower time frames to have a look at that, which we'll do in a minute. E-mini S&P, we still have that daily fair value gap untouched and a little tiny bit of price action at the top here. That was all this stuff on NASDAQ. NASDAQ had its one right here, and its little bit of imbalance above it. It's already filled all that already. And E-mini S&P is just barely touched the bottom of it here. So we're looking at for that to continue to fill. We may go sideways a little while longer, but we have non-farm payroll, so maybe Friday would be the run into that level. Price imbalance here on Dow. Finally blew through it on Friday. Friday, yeah. Friday took out that high. Took out that imbalance. So look for that imbalance now to provide a level of support. There you go. Look at that. Came down, tagged it. Now we get a reaction off of it. So we haven't validated this candle here. So there's no bullish candle on the daily that's been validated. So all we have is bearish candles. And that one's the only one validated, but we've now tracked below it. So there's really nothing here on the daily to draw from, other than do we have support off of this imbalance, and we're running back up into these relative equal highs again. Oil, if you're into oil. Oh, we talked about that already. Gold. I like to see gold get a little heavy here and get back into these equal highs. Go back into that fair value gap. Right now we've traded back into this order blocks body. It's open and we're reacting off of that. If we do get a push back up again, then the mean threshold is you want to see that mean threshold break if you want to see prices continue up. The fact that we've broke below this low here, came back up into the body again. My thoughts are we're going to run for this low and get back into these old highs here. That's my thoughts on gold right now. From the daily perspective, that might change on the hourly. Oh yeah, no, you've got a market structure break here, so look for this. And gold. If we do get a run back up, look for the 1, 2, 3, 4. So Monday's open. Monday's open candle. See if that holds price for run down. If not, I like this fair value gap in here for gold on the hourly. All right, let's get back into our run. I think this is 15,960. 15,960. 15,960. Let's go into 15-minute here. Which one's actually the better one of the pair? What's new in here? Global Finch Index. FinTech. Okay. I think this is just one of those price action days. Kind of look for price to run back into the middle of this range again on NASDAQ. Just because non-farm payroll, I'm more along the idea of just returning to that order block there. So 15,967. That's where I'm looking for NASDAQ today. If we're just coming back into that range, look for that midpoint there before Fridays, and that'll put us in a perfect position to go. I have no idea where it's going to go, up or down. We're going to run for old highs, or we're going to come back in this fair value gap, reconnect with this breaker. How are we going to take? I'll give you multiple scenarios here. So 50%, we still haven't hit 50%. So if we look at a retracement in terms of 62%, 62% puts us inside that breaker for sure. Comes us up, brings us right back on top of that order block for still a positive bullish move upward. So key levels to look for here: 50, 62%, or 50% of that range again. Lori, how you going, buddy? Rizwan, hello, my friend. Way over there in Pakistan. How's things over there? And Super D. Derek is with us this morning. Well, initially I want to drop. You wanted it to drop down? Yeah, I like this idea down here, but I think we might get a pull back into the range to stay on non-farm wobbly day. Non-farm payroll, not for prop firms. That's what I'm going to put it as. Not for prop firms. Master T. Mr. T, how's it going? Good morning, good morning. All right, so let's get down into something that we can look at on the uno momento, or here, let's go to this 15 minutes, see what's happening here. Oh, look at this. Do we? Yes, Derek, I do agree. This is a potential drop down. Look at that huge gap between regular trading hours and electronic trading hours. Is there a potential to run all the way back into this or not? Here we go. Was it 15,978 I was calling? We have a fair value gap over here. This has all been filled in terms of the regular trading hours, but we do have a fair value gap sitting in here on the 15-minute chart from there to there. Make sure it snaps on there. We'll call that 15-minute fair value gap. There's one on the other side there as well. We'll get rid of that one now because we're inside this dude. Want some highs. Lori, I don't know if you saw that little review I gave this morning. Your slider this morning was such a beautiful trade. I caught it, but on the lower time frames, I was waffling so much. I ended up chickening out, but I even made the projection from the low to a 4-banger high, which was around here this morning. And that was the LS slider, right? We have the consolidation break above fair value gap. You get in here and then ride that baby all the way up. Well, on the 1 minute and the 30-second chart. I think it was just after London, or in the London session, I was looking at it. Which one was that? Oh, it was E-mini S&P. There it is there. So there's the 4-banger right there, right off of, see that one right there? Bang. That's a Lauriston slide right there. And it's still going. So that would have been 5, 6, 7, probably an 8-banger there. Out of curiosity, just because I like to rub it in and give myself a little. 5, 8. There's 5. Oh, 5. 5.5. 8's way up there. Derek, are we going for it? Are we going for this 16055? Nobody answered my question yesterday about why 16055 is so important. I had all these people in here and nobody said, hey, I know what you're looking at. What am I looking at there? What was that little yeah face for? I was looking for that. Did not happen. We just completely rejected away from it. And now we're on our tear back up. So if we lose this fair value gap, get some support, that 1 hour breaker, what holds so much interest in here? Small risk, yeah. I can't risk anything less than 1 handle on this. Like on my demo account, I risk 5 handles. I think the psychology of that is, I picture myself as Michael. I know it's not trying to sound egotistical, but I try to replicate. That's how I did with all the years I was teaching medical stuff. I had some mentors that were so amazing at what they did, and I tried to emulate them. I emulated their jokes, and I emulated everything about them to try and get the same kind of quality courses that they were teaching. And I must say, it kind of worked out. So I kind of picture myself like Michael. You know, if you imagine yourself to be like him, even if you can't even reach his level of success, hold yourself to a standard. Hold yourself, imagine yourself, put it in your nervous system that you're an excellent trader. You'll make mistakes. That's okay. You'll have doubts creep in. That's okay. Just let them pass by like a cloud. Just watch a cloud go by and just keep reaching for excellence. So anyway, that's my morning rant while we're watching the... Oh, look at this. We have somebody new. ICTALGO Trading. ICT Algo ICTALGO Trading. Well, like, what the hell is ICTALGO? ICT Algo Trading. How you doing, buddy? I'm hooked on phonics, man. The draw is obviously this 15-minute fair value gap we were calling earlier. So, but I still like this upside price. If we take this out, look for that 16,055. Kind of hard to imagine you talking like Michael did in his spaces. No, I'm not going to go into my rants. I will occasionally, as you have all been witness to, will go off onto my paramedic or firefighter rants after 30 years of EMS and firefighting. I'll suddenly go off on a rant. I'll tell you a story, an old war story that may be too gross to listen to. I'll try to keep them as germane as I can and G-rated, but hey, it takes the fun out of it if you can't tell the whole thing. I don't mention anybody's name, so there's no breach of confidentiality, but I'll sometimes just go off with my little rants about an interesting story. I do, however, while we're waiting for this, I heard about this saying that somebody quoted the other day, and I thought, oh, I like that. I think I'm going to read that to people. So you can bear with me. Or you can switch to a different channel if you want. I don't care. But I thought this was a really interesting passage. So this passage will change your life. It's not the critic who counts, and it's not the man who points out how the strong man stumbles or of the deeds that he could have done better. The critic belongs to the person who is actually, or the credit belongs to the person who is actually in the arena, whose face is marred with the blood and the sweat and the dust, who at the best, in the end, knows the triumph of high achievement, who at the worst, if he fails, daringly great. And if you are going to show up and be seen there, isn't the only guarantee. There's only one guarantee, and that you'll get your ass kicked. That is the guarantee. That is the only certainty you have. If you're going to spend any time in there whatsoever, especially if you have committed to creating in your life, you'll get your ass kicked. It's the new philosophy about criticism, which is, if you're not in the arena also getting your ass kicked, I'm not interested in your feedback. Welcome to the arena, my friends. Let us unite and dispatch the beast together. I added that last bit in there, but whatever. It makes a good point. It makes the point. Don't listen to critics. We had people come in. We've actually barred one person that was actually an idiot. That's fine. Come in and make a stupid comment, you're gone. Critics, we don't need them. Get in the arena. We're in the arena here, people. We're trying to make it work. So I have no tolerance for people who stand and judge on the sidelines. Step in the arena. And this is really tough on my end because you guys are seeing me fail right in front of you. I make decisions. I make bad choices right in front of you. But that's the people who are willing to stand up and make it happen, man. And we got some great guys in here. Really good guys. So if anybody is new here, keep your eye on this, man, because we got the Huddleston slide, which is probably an ICT setup, but it's now been affectionately dubbed the Huddleston slide, which is pretty much a consolidation, break above a consolidation, go to the lower time frame, confirm that there's an opportunity to get long again, and take that for a run up. Yes, it's an ICT classic setup of a consolidation, break above it, come back to the top of the consolidation or 50% of the consolidation, and then leave. But Huddleston is, he sees that like you wouldn't see it, like nobody's business. Same draw, brah. Same draw, brah. Suddenly, everything goes dead quiet. Sorry, I have no more sayings, no more quotes to read you. Oh, there was something about somebody had said, check the 1 minute time frame. 1 minute time frame. New York AM session. We popped into that 15 minute. We're still waiting for the 10 o'clock here, hey? If we do get a return back down into this regular trading hours gap, I was looking at 78. Oh, it's so close. Look at that. It hits 82. So it's four handles over where I was looking. I'm gonna make sure I'm on the right one. I'm not talking out of my butt here. I was calling for a 50% retracement back into the middle of the. Let me just make sure that I've got this. I'm not BSing you guys. I think it was the hourly. Or was it the whole day range? Yeah, the whole day, the whole range for the week. That high, that low. Yeah, this is where I was calling. So 15965. I don't know why I got in there. 62. Anyway, that 50% of that whole range that we've had from here to here, it looked like we're pulling back into the midpoint of that range just because it's non-farm payroll week. Oh no, this was this guy right here. I was calling the open time, correct? So there's the New York open time. Oh, we're right on the money. 780. I'm almost sure I said 78 somewhere. I might have misread that one. Anyway, so we've just returned to the midnight candle open. Inside the fair value gap we looked at, also inside that order block breaker. Yes, we ran below these lows here. So we ran below that big ass breaker right there. 50% of that breaker. Was it the 50% of the breaker I was talking about? Man, oh man, I don't want to give you guys a wrong call, but you have the right idea what I'm talking about anyway. 50% of that baby is right there, and that's 70, still not the midpoint. Anyway, we've got multiple overlaps. So we have the midpoint of that breaker right there. That's the mean threshold. You want to see that whole price, and that happens to coincide with the confluence of the daily open, or the New York Open midnight candle. And we've had a nice little reaction off of that right now. So we start digging down into these lower time frames. Let's wait for a breaking structure. Lauriston's probably all over this already. Oh, let me get back up there and get rid of that. Otherwise we'll have tons of overlap. Remove that. 5 minute. Okay, so this gap, that would be a great fill all the way down into this fair value gap down below. So breaking structure. Look for this candle to return to. Do we get below that? Problem with this gap is I don't know if the wick is being, how long that wick is inside there. So where's the low? The low is 907. 907. Oh, it's right here. Okay. So we close, we come back into this candle here for continuation on the downside. Into that gap again. We have little lows along the way. We also have this fair value gap here on the 1 minute. Hit yesterday's midnight open, yeah. Cool. Went long on NASDAQ. You went long? You went long? Check the 1 minute time frame. Where did it go long? Or were you looking to run back into here and go long? Yeah, I see a return. I see a short. I don't see a long there. That's 9:30 a.m. when the market opened. Ah, yes, the run below the 9:30. So if we get a return back into here, and look at this here, if we come from that high to this low, 50% puts us right on this breaker if we don't extend past that. So we are at a premium for the current range. Yeah, for sure. But if we're going to work this whole range that was created since London, there's London's high. Yeah, I want to see that come back up into. Oh no, you got delayed data. Sorry, buddy. Yeah, I was gonna say it doesn't look good for a long, but delayed data, that sucks. Blue, what do they call blue locks? Blue knocks. You get that rejection, blue knocks. There's the return to the breaker. Now you go to a lower time frame, see if we can get some support on that. 30 seconds. We'll wait for anything that you get down into this, as Lauriston likes to do. I like these equal lows here. We're still inside this breaker. You may get the equal lows. Let's wait and see. 30 seconds. Let's move into 5 seconds. Look for confirmation here now. You want to see this give way here. I want to see that drop down with an impulse leg. And then come back into this for a short. Unless you're already bold enough to go for the 1 minute charger. But we're coming up for 10 o'clock. So wait. I think I'm just going to call it today and try and force myself not to participate. I think this is, for me, it's an exercise in not participating instead of participating. So that would be my imaginary participation point here. 5 seconds looking for your entry. Off the order block. So you got the leg down, leg, find support of the order block, find support of the order block, drop down, come back in. Do we continue down? That order block held. Good. Now you want to see drop below this low. We're still inside this fair value gap over here though. So is this the turning point to run back up, or do we continue back down? Considering that was our breaker over there, we want to see this continue down. We want to see this fair value gap just give up price and just keep going down. Like that. Just like that. It's like we're telling it what to do. Alright, so we want to see breaking through this consolidation now. I want to see it break through, come back up inside this guy here. You find support at that. That's potentially another entrance for a short. Stop loss goes up here. Return to an old low. Don't forget, we're still not at 10 o'clock yet, so 10 o'clock can take out highs and lows, so if you were tight on that one, your stop losses just got taken there. Wait till 10. We don't have a break below this low yet. Yeah. So go back to the 1 minute. Revisit the breaker. Now if we take that out, come into this, a little tiny imbalance sitting right here, a little SIBI that still supports a 2 minute breaker. I'm not doing working with them again. Their customer support is atrocious. Yeah. You know, if you get delayed data in times like this when you need that, and that's a classic example of, hey, you needed that. You needed that data to be there for you, right? So yeah, I would pitch those people for sure, but it depends on what's available to you down in Trinidad and Tobago, right? 50% of this range is right here. 934. Right at the top of the regular trading hours. Inversion fair value gap here. So return to the edge of that will fill this. See how that acts there. All right, so we've got a few more minutes. One more minute. ICT algo trading. Whereabouts are you? Where do you hail from? What part of the world are you in? Compressing inside, pop above, order block, threshold. We're between these two now. Rejection block. Order block. Body. There's nothing else left in there except for this mean threshold, rejection blocks, and wicks on the upside. And then we already hit the rejection block here, so you've just got wicks left. Wicks and wicks. So you're either compressing in the lower time frames. If you go down to the seconds of charts, you'll probably find smaller arrays left in there as this compresses, and they run out of arrays, and then we have to expand to the upside or downside. So as you see them bouncing around in here, that's like on the 1 second charts. They're running premium and discount arrays until they run out, and this puppy has to move. That's the 10 o'clock open. What are you going to run out? Look at that. See? That was the array there. Mean threshold. Hit it. Came off of it. This guy here, you've already worked its mean threshold multiple times. You came down into a discount array on the 1 minute in here. Next minute, it should pop off in the next minute. One more minute. Which way is it going to go? Up or down? What a beautiful little compression. It doesn't do anything here. By 7 in the next 5 minutes or so. We're looking for a silver bullet entry. I'm using your stream to enter in a trade. My data is super delayed. You're on Skype then? You're catching that on Skype? And is it giving it to you fast enough? Wow, really delayed, hey? Couple more minutes. Jody! Woohoo! Welcome back. Jody, Jody, Jody. It's good to have you back, Jody. You're on non-farm payroll week. And on YouTube here. Oh, you're on YouTube. Yeah, go to the Skype channel. I'm live streaming on Skype as well, so I think that's faster than there's a slight delay on YouTube. So go to the Skype channel and you should see a quicker feed on that. I'm back. Okay, so we're looking for a run up here. I'd like to see a pop up above here. Clean this lot out, and the next couple of minutes should do that. That'll give us our wick into our power of 3. Yeah, sorry, Jody, you're in the middle of a non-farm payroll week. It is not a great week to be teaching anybody anything, but just kind of get an idea of price action. Right now we're looking for this little tiny itty-bitty spot right up here. And yes, those do play important roles. This right here is called a breaker. These last 2 minute, 1 minute candles turn into 1 2 minute order block that breaks this little high here, run up, cleans out old highs back there probably. So we want to see this order block hold price. So I just want to see this pop up just a little higher. That actually did take out those highs. Don't give me a little tiny breakthrough like that. Give me this thing here. I want this. I want. So there we go. So now we're in there. That's what we're looking for there. Now order block. We still have this breaker up here. So don't get too upset if it returns to that spot right there or the body. It's legit. It's perfectly still available. This is just where the wicks do the damage. So we've had the order block breaker has been hit here. A little fair value, yeah. Now you want to see, let's go down to our 5-second chart and look for a slider. Slider. I'm calling it a slider, Lauriston. The slider. Here it comes. Here it comes, baby. Here comes the slider. The LS slide. We want to see a cliff here. We want to break with a big impulse leg down. Get the low, these lows in the impulse leg, and then come back into the lows for rundown. So here's it. This is a little swingy point, body. Turn around and go down now. We're still inside this consolidation, so nothing's confirmed yet. Yes, we hit the breaker up here, but I want to see how that definite sign from Smart Money that we're reversing. And until we get that on a 5-second chart, or if you want to wait for it longer on a 1-minute chart, then wait. So well, see, it's not done on that breaker yet, so we're back up. Let's get back up into here. This is why you don't rush into those the first stop loss or the first fair value gaps you see for the silver bullets. Though right there on that 956 candle, if you traded that back there and you took that long with your stop loss down here, you're good, and you would have got your 5 handles out. So that one inside that big messy consolidation at 10 o'clock. No, you're already through it before 10 o'clock. All right, so here we are, run back up there again. So now do we have our little 5-second? Here we go. Here's the impulse leg. 50% of this leg now, or this breaker. Did that break? No, I didn't. I'm going to do this guy right here as just a demo of 50% of this here. Get back into this. If I don't get this, I'm going to be super picky too. You could run off of that. Not a big break above that old high. I don't think it even broke the high. So I would put an entrance in here in that little gap that's right there on the 5-second. Oh, right there. I'm not putting 5 lots on that. Are you kidding me? Nope. No big break above that. You want to see this break that high, come down, break this low, and get into that. Too many equal highs there, so they might run that out yet. And we still got the next minute or so. I want to see that pop up here. Just pop up above them, make a run on that liquidity. Then we can do it. Whatever this one ends up being, if we decide to go like that, then we go blammo. That will be our impulse leg that breaks the high. There you go. We'll wait for find out where that's going to go. If that's our impulse leg. We've cleaned out the highs now. We want to see that come all the way back down. If it continues to go higher, that 15-minute fair value gap draw we talked about earlier is still in play. And then you look for the threshold of that. So I'm going to drop this idea. And let's go into the 15-minute again as that draw on liquidity. Midpoint is still right here. So we haven't got an entrance on that 5-second chart. Very NFP-ish. We should call it NFP-ish. It's very peevish. This PA price action is actually horrendous. Yes. Lee! How's my buddy from Lee? Lee Tech. Lee Tech from Malaysia, correct? You're from Malaysia? By looking at this, targeting price return and hit the 1-minute fair value gap every short or entry short and put the stop loss on top of the bullish order block candle. On the 1 minute, you went on top of the order block 1 minute candle. You're up here for a short. You could get a return to that. That's definitely a breaker. If you can get that breaker hold price and you've got your stop loss up here, It's the parent breaker of that little run down here below this run low. So if you get that whole mean threshold, you don't want to lose that mean threshold. I think the draw on liquidity is still the upside. So be careful that your stop doesn't get run. Look for the mean threshold there. We've got consolidation here now. So again, this supports if we get a run back down into here. We've got a break in this consolidation. So it's like the reversal of what we were looking for before. So this is like the slider in reverse, the riser. So we've got this one where you come back down to these equal highs and then continue to push price higher. So you don't want that order block midpoint to lose. Yeah, I should have broke down a long time ago. I was kind of hoping that if this was the impulse leg, we come back at 50% of that impulse leg to break above the high. But if this is the impulse leg above the consolidation, yeah, if that's the impulse, and that's pretty big from a 1 minute perspective, then you've got to get down below it, come back into 50% of that range to consider going a short. So that's what I was hoping for, waiting for there. So now we've broken the rejection block. This consolidation, run back into that higher time frame 15 minute that we were looking at here. That's not done yet. That's still the draw on liquidity. This was just a return to equal highs, New York Open. See that? Find some support there for further upside prices. So we weren't coming back to fill that fair value gap on the, or that regular trading hour gap. Okay, I'll just call you Lee from Malaysia. Great to know everyone here. Ops. My stop coming. Oops, my stop's coming. I love this. We got people from all over. We got Pakistan here. We got Malaysia. I got my boys down in the States. We're coming up here from the frozen north. I shouldn't say frozen north. We've had like 16-degree days here. We had a 16-degree day the other day in December. Unheard of. And we got our first little slop of snow again last night, and it's gonna end up melting and just end up being some rain, which the ground really needs. But it's great out there. Holy smokes. We don't have any snow. My wife did nail a deer the other day. Totaled her car. Well, $7,500 worth of damage. So they got to go and repair that. So she's good though. She's safe. Ohio in the States. Mr. T is from Ohio. Ohio. Do you ever remember that cartoon, Bugs Bunny cartoon? I'm probably dating myself. You guys are all probably young pups. Derek might remember it if he remembers Bugs Bunny. Remember that guy used to say, watch. The joke was supposed to be, watch high in the middle and round on both ends. Ohio, get it? Ohio. And he stuck his finger in Bugs' mouth and made a little circle. Oh, hi, oh, yuck, yuck, yuck. I got cartoons going through my head. Oh, hi, oh. I'm just your back issue, buddy. Oh, my back's been like terrible. Because I sit so much, my hip flexors are super tight. So now it's affecting my walking, hip, my back hurts. And then when your back really hurts, you can't try and do your exercises. Because the last snow we had, I threw my back with this little skiff of snow we had. And it's been hurting super bad. And then I was on the step the other day. I put my foot up on the step. We're trying to go for a walk. And I thought, I'll just try and stretch out my hip. So I put my foot up on one of the steps. And then I twisted and my back just went crunch. I was like, oh no, what have I done? I got this shooting pain, and within a few minutes, it started easing off. I got into the house, and I was like, oh, actually, that's not feeling too bad right now. So I might have given myself an adjustment just by cranking my hips, trying to stretch my leg out. So, I don't know, the back's feeling a little better, but the hip's killing me like crazy right now. I tell you, getting old sucks. That's the problem when you have a career it's hard on your body, crawling around inside vehicles and hauling hose and burning buildings, and it's hard on the body, but fun. Oh boy, climbing mountains, rescues, swift water rescue, ice water rescue, all of it. They're all flashing into my head now that I say them. Doing swift water rescues, pulling people off of root bulbs, and ice water rescue when we had to go take our courses, and we're all out there in our dry suits jumping up and down on the ice until it finally breaks and we all fall through. Then you got to do self-rescue out in the ice, or you use the boat to go out and get somebody. It's fun. I remember my wife came out for the first time to watch me do that. She was like, I can't believe you guys are laughing. You're jumping up and down on the ice. You're trying to deliberately fall through. And it would rake the ice would be really thick, so it would just scrape your shins as you go through it, because the ice would break on one side and it was firm on the other, so your shins would just get raked. So as soon as it broke, you try to turtle into a ball and go into the water. Here's our midpoint 15. Okay, there's the consequent encroachment of the SIBI. We still don't have our turn yet. I'm glad Lori gave me that idea for the 5-second. Go down to a 5-second chart and look for your confirmation, because I probably would have taken a short on that based on a 1-minute chart before, and look for the confirmation. I do like the idea about confirm your idea on a lower time frame, because I didn't get it, and I was getting ready to put a sell in there. It didn't happen. So I will continue to practice that in front of you guys, so we hone that skill of getting in a cleaner entrance. So 1-minute chart. Let's go around here and see if there was a... So there's 10. There's your... That's the first one. Well, actually, no, 10 o'clock. There's nothing. Here's your first one. You don't get it. Second one, you don't get it. Third one, you get it there. So there's... Before you run out that high, you come back, you get your fill, you drive above your high, So if you're looking for a quick little snack, little cheese nibble on a silver bullet entry, right there. Before, if it would have taken the high out, I would have said no. Come back, you get that little piece there from that low 63. And there's still 17, 18 handles, 20 handles right there. From there to there, 20 handles. And if your objective was the midpoint of that thing there, 64 to 94, there's 30 handles, right? Just on that little silver bullet entry there, running for your midpoint that we talked about earlier. And you would have nailed it beautifully, 30 handles. Whatever your setup is. Now, as we continue to eat through this, if we take our fair value gap and split it up into quarters, we're at the 50% right now. Probably going to work the lower half here first, back into that original high, 25%. Old high here. Order block, 3-minute order block. Now, ideally, you'd want to see this stay open. If it does come back and fill this, you want to see this stay open and continue to fill the rest of that fair value gap. We're up to 55 subscribers now. Woohoo! 55 people, eh? Wow. So I'd want to see if this was the point where we get the turn and we start to get back into this regular trading hour. So let's kind of look at that as a possibility. If this holds price now, what do we want to see break below? Here or here for a continuation? Or for the reversal, I should say. We need to lose this order block with a big bold candle down. A nice impulse candle down. Return to this. Leave that portion open. We need to drive through 50% of this. We need to get through all of this in order to go bearish. We need to lose 50% of that range. Oh, the drawn liquidity, where is it? Where shall we go? La, da, da, da. Let's go on a little tour through the other charts because this dead air is killing me. Okay, here we go. This was mentioned earlier this morning, the return to that 4 or 1 hour fair value gap. We're right up there now. That would have been the nicer run today. NASDAQ. Now let's go into NASDAQ and have a little peeky-poo at 10 o'clock. Oops, let me put that back on the daily and get back into the other charts. Here we go. So 1 minute. Oh, we're on there. So we're right back into that 1 hour chart. Right here, there's a little tiny impulse. Sorry, not impulse. Imbalance. There's a little price imbalance right there. Okay, let's go back over to these charts and see what else we got going on. So there's that impulse leg. Sorry. Not impulse leg, just this run back up into this order block here, midpoint, that threshold right there. I was mentioning how these candles are all inside this guy. So look for the midpoint of that, which is also that price imbalance we just showed you on the 1 hour. Look for price to return into that and see if that holds, or we run these highs here. S&P 500, still looking for this daily fair value gap above price. We have a lot of liquidity sitting above there now. This mean threshold of this candle, does it hold price now, right where it's at? Or do we continue to slowly drive up and either make relative equal highs again and roll back into another consolidation piece here for tomorrow? And tomorrow is the day that we either pop up in or drive down below. Like, this is all engineered liquidity. And is tomorrow the day where they start to chase one side or the other with this big draw up here. What I'd like to see is a wick down, clean this lot out. So all those people that are trailed up behind here to go long for this fair value gap to fill. Run back, take them out. Take these guys offside or onside. Run back up and clean them out. So they take out the liquidity on both sides. Ideally, that's what I'd like to. If I was going to see, if I was playing with the markets, that's how I would run it. Run these guys out before you take out this higher liquidity. And Dow Jones today is run right back into that imbalance that we're looking for up here, so to speak. That imbalance right there, we've tagged it, and now we're back into that range that's created from this candle's high to this candle's low. Sorry, this candle's low to that candle's high. That fair value gap has now been filled. We've returned to the imbalance, found support. Now do we continue pushing for prices higher? Look at that wick now. The wick's the one thing you've got to start ripping into. So draw your fib tool from the bottom to the top. Set it into quarters and look for price to work that. What's oil up to? Oil is continuing down, pop back up today. Inside that inversion fair value gap over here. Yeah, we're through 50% of that, so I still like the run on the lows. Gold. Yeah, I wanted this to go much higher before it went down lower. So we're consolidating here. We're looking for the big impulse leg now, above or below, to see which way smart money's going with this. So this is kind of good. I like to see consolidations actually, because then when you see that impulse leg up or down, that's the structure break, right? The market structure shift, and then look for your fair value gap entrance to get back in, or a breaker to get off of to go back down or up, depending on which direction we're going in. So gold's kind of sitting in a nice little consolidation piece right now. I like that. $10.30. $10.36. We're up to 75% now. At the 75 right there. Just out of curiosity, since we are trading mini NASDAQ here, would you guys look at NASDAQ top 10 weight stocks chart in the meantime as a reference or decision making for your trades? Would you guys look at the NASDAQ top 10 weight stocks chart? And what's the markup here for that top 10? Is it like, do I have to go offline to find that, or is there something in here that I can type in there, Lee? Copy the link into the chart and I'll have a look. You guys look at the NASDAQ top 10 weight stocks chart as reference or decision making for your trades. I wouldn't, Lee. Yeah, Stocks have zero to do with, for me, has zero to do for influence on price. It's all algorithmic. Stocks, everything. You won't convince me any other way. I actually trade my own personal stuff off of algorithmic charts. I don't even, if I ever pick a stock, I pick it based on its algorithmic thing. Nothing to do with the company, any fundamentals or anything like that. I know some people be going, you're nuts. But I only trade whatever fundamentally, or what I technically see in the charts. I don't trade fundamentals, and I have in no way do I allow them to influence anything I do in the market or make a decision. And just because one stock's doing better than another stock would not influence anything that I decide in my charts at all. But I'm willing to look at your chart and say what it is I see. If you're going through top 10 individual stocks in there and trying to find out which one's the best, then if you're a member that went in through Michael's entire mentorship, you'll find, even in his free stuff, you'll find how he picks stocks. There's a technique that he uses to pick stocks. I've never seen him actually talk about it in his private stuff or his public stuff, but it is there available for you. So I will leave you to find that in his chart or his regular mentorship stuff, and he'll show you how to look for specific patterns that find the best stocks to pick for October, November to run up into January, February, just for about a 4-month run, and then you're out. So if you're picking stocks, go to his stock picker lectures. Otherwise, and that's again all based on algorithmic presentation. So you can pick where the smart money is. Like you go into you look for the divergence that occurs inside the markets. Here, I'm telling you how it's done now. Anyway, the start is look for divergence in the market. Find out what market is the stronger one of the three. When you see an SMT divergence pattern forming, then you go into all the stocks. Forget about those all the stocks that are in the other companies or other indices. Go to that one index, and then there's a technique for actually finding the ones smart money's investing in to put your money in for the next 4 months or so. Michael was getting like 25% returns on his RSPs, as it were, his stocks, and he was only doing it for 4 months. But look that up. Yeah, dollar index would be, well, dollar index, especially when you're looking at the Forex market, because they're generally inversely related. For your information, top 10 companies by weight in sorry, I flipped over there. By weight in the Nasdaq 100. Thanks, Derek. Candle, Nasdaq, last minute. Took a look at 2 equal highs and moved down a bit. 1040 look. Took out the 2 equal lows. Yeah, I'd want to see this break an impulse leg, really drive through here first, preferably through this, come back up inside it, open, tag these old lows and run down. Kind of like this. Oh, it's not working. Ow. There's got to be a faster way to draw this. Like that. And then down again. Kind of like that idea. No propulsion to go down though. Soon to hit the 5-minute breaker at the 5:16:02. Yeah, I want to see big impulse leg here. Tip their hand. We're off that order block here. Not a breaker yet, because this is not a swing point. There's the nearest swing point, so you want to see it break through here. So we just got order blocks we're banging off of here, here, and here. We're between these two right now. I wonder if my little drawing feature will work on here. This will drive you guys nuts, because it'll be I think it's down here. Sorry. I think I've got like an annotator. Oh well, I was gonna say, if I get my pen working, then I can just draw all over the screen. It'd drive you crazy. Oh, it's right there. Look at that. Watch this. Ooh. Oh, we don't want it in white. No, there's no stopping me. So I want to see that kind of drop down into here off that guy, run back up to the bottoms here, and then drop down, if that's what we're going to do there. Is Laurie still with us? Is he trying to sort out that data stream? Consolidations are good. I want to see some impulse though. Let's see what she's doing in here. Little step. See that little dip down? Nothing. I like to see a body get through all that lot though. We ever run the lows, little fair value gap, trade back into it for a short. Not a strong one, so I wouldn't even touch that. That's just a 1 minute. It's waffling way too much. All the more reason not to be involved in the charts. What is Dixie doing? Yes, right off that daily fair value gap inversion, it came back up. We opened on the day, ran up to the top of the inversion fair value gap daily. See right here? And then we've run all the way down. So I vaguely remember mentioning about banging around inside here between these two. Like if we come down and tag this, that we would stay inside here before making either a run above or a run below here. We're kind of in between these now. I'd have to go back, but I'm sure I mentioned that we were going to come down and just hang around inside here. Doesn't matter. I don't have to be right. But dollar index. You have to check in the last couple of days. My discussion about coming back into here. Now, if you want this to provide support, there's an imbalance in here as well. You want to see this level provide support and then start to turn around and climb back up. You will need to get through this midpoint of this inversion fair value gap now, and then get on top of it to get to support and then start returning back into this higher time frame. As we saw, this is a 50% run and then a pull back down. So if you take your chart now and split this into a, right there, you split that into a quarters. You hit 50%. So we're going to work inside here, back to this order block. That's your next 25% side down in terms of that price leg. Or that little range we've got here. If we clear out this midpoint, look for your gap. It's thinly traded in here. Buy side, no sell side, all buy side wicks, buy side. So look for price to run all the way down to the. That's it. That's what I'll be looking for a long-term downside run on dollar. Well, I got a delay in there. So swing point breaker, return into and come all the way down into here. You want to see that big bull flag for the retail people out there? Bull flag to form. Push for higher prices. We got lots of equal highs here. We've got liquidity built up there. Back into this fair value. Yep. Clean that one out. Attack the edge of that one for a run up. Now I'm looking at for that. Still nothing on a 1 minute chart yet. Back into the consequent encroachment again. Sure, I work in that 50% range. This is good. This is where you separate people who are dedicated in it and are just bopping around to see what they can find in a bunch of live channels. You know, if you're dedicated, you're going to be sitting there staring at this stuff till your eyes start to bleed. But this is what you got to do to read price action. You got to be in it and watching times like this where it's just sitting here doing nothing. It's banging around and you wait for it to show you some sort of a measure of market structure shift and see if you're alert and attentive enough to see it. So for me, this is as painful as it is to watch it. It's a good practice because you get lulled into a sense of Oh, I just missed that because you've just been watching these little candles go up and down, up and down. But if you have your objective in mind, you got plenty of time to build a narrative for up or down for a setup that you're looking for. We'll be off and on in Skype, but have to do something else right now. And take care, and thanks again, Darren. Oh, you're very welcome, Derek. Yeah, pop in. The Skype's always available for you whenever you guys want to pop in. So thanks for your input as usual, man. I really appreciate your insights, Derek. You're a great thinker, man. I like it. Enjoy your day. Be safe out there. Spread the love. Let's go into let's see if something happens in the next 4 minutes. 4 to 5 minutes. I think this is marking time around that 50% of that range again for, let me look at what this is doing here on the daily. If we take this range here, I think this is the one I was looking at, this 15,967, so right in the middle of this range here, high-low, which would be for the markets to just meander around until non-farm payroll. This would be the time to do it. We've pulled back into that range and sit at that point. And we were discussing that earlier. My first part of my analysis this morning was looking for this area. And it looks like we're just sitting in here. Now, mean threshold of that candle, run below low, and in the middle of this range. Nothing else to do in there. This could be just the rest of the day here now. A wick running up and down inside here around that 50% mark. Now, let's do this. I'm just playing here. This is not a Michaelism at all. I'm just experimenting with something, so bear with me. So here's my thoughts, guys. I'm just curious, after that little pop-up there, I'm curious, are we about to stay inside this range here of this wick for the rest of the day? What are your thoughts, guys? Give me your ideas. This one, 75%, lines up with the 50% of this wick or this breaker. Or run down here. All this stuff is hidden inside this thing. So if we look at a run below this low, that was the run, that big fella right there is the one that ran it. So if we come back into the midpoint of that, which is 75%, so if we stay inside here today, that's my guess. And believe me, it's a guess. I was just working a theory there. 25% on either side. Work in that range from the 75, 50 for the rest of the day. And we'll find out tomorrow whether or not I was right. If you take that high out, I was talking out of my butt. What do I know? What do I know? I don't like it way up there. Oh, this is the daily. We're just looking at that one. Rejection block, wick holds, order block, that imbalance we looked at earlier, that 1 hour imbalance right there. We can extend that out to the right. If we can make these crosshairs actual lines instead of dotted lines. (911). It's 9/11. I think this will be it for me for the day. As fun as it has been watching these candles go sideways, it's typical non-farm payroll kind of day. We pull back into that range. So again, I'm looking for this kind of settle in into this area here for the next few hours. Afternoon session might be something a little different. I doubt it, but if yeah, if we don't do anything major in the next few minutes, I will sign out for the day, and I will see you guys tomorrow bright and early. Keep your eyes on the charts, and thanks for popping in. I appreciate you guys and your time. I know how valuable your time is, and I appreciate you popping in and sharing a moment with us. Thank you for anybody new popped in today, and the regular guys, Rizwan, Derek, Lori, Mr. T there, and Lee. Thanks for popping in again, buddy. Appreciate that. And ICT Algo guy. We had a new guy popping in today. ICT Algo Trading. Thanks for popping in. And as usual, I wish you guys all the very best. And what's going on here? Stand by. You want to see it get through here. I like this little impulse leg down below the lows. Here, my prop account is in lots of losses. Oh no! Is it because of the delay? In front, that delay shit, man. You gotta toast those guys. Took trades using the delay data. Oh my goodness, that's hard to do because you're just hoping to read it. Oh, that'd be painful. So here's an impulse leg here, consolidation. We ran below the consolidation, come back into it. And we have a breaker inside a fair value gap. I'd want it to get up inside here with a really small stop loss. But that would be technically a place to enter in with the impulse down below this consolidation, return short. Just so you guys know that we're catching this right as it's happening, because now we've broken through that. I like that. Get through here. There you go. That right there, just that trade alone, 82, is 10 handles or 11 handles right there. Just on that quick little run to that fair value gap there. Now this you want to see provide support, or if it does run up into a fake return into this cluster of candles here, to get short. If not, if you're in that one still off that low, look for this low here. So this is what I was telling you. You have to have the ability to be able to withstand staring at this stuff over and over again. I was just about to close that out, and we saw the impulse leg down. Order block, return to right there. We're calling for an entrance. You could take a piece off there, take a piece off there for quick little 10 handles, and another just from there to there is 80. You're about to get 30 handles off of this thing right here. I didn't take it, just I told you I'm not going to trade it. But the idea, this is what I'm looking for right there. So, perfect slider. That's an LS slider trade right there. We broke the highs with a wick, came down, took the lows with an impulse leg, created a fair value gap, came back up, traded into it, also the bottom of the consolidation, and now we're running these lows out here. So there's your first exit. If you didn't take any out here, if you're a quick snipe and you want to take 10 handles, right there was your first 10. You're into 30 handles already now. Return to this original consolidation, so these equal highs down here would be my next objective. Yeah, the delayed data messed me up. Hey, you're very welcome, Lee. Pop in anytime you want, my friend. You're welcome anytime. Lori, didn't realize the data was delayed till I saw your stream. Oh no. Yeah, I was wondering why you were going long on that one. It was just like auguring down on you. Look at that. That's already 40 handles. Right to the top of these equal highs here. I would have scaled out another portion there. Take out another portion at the close of that fair value gap there. Stop loss would be moved to break even or even into profit, just because this is so volatile. It's not trying to grab huge runs here. It's about protecting your profits. So that would have been a zero drawdown. 10 handles, 30 handles, 40 handles to this old high here. And I'd have my drop stop loss sitting right on that breaker right there. Look for 50% of this consolidation. If you lose 50%, look for further downside now. Oh my goodness. That's a nice trade. $50 handles right there. That's the next objective. That's filled. Well, for the two people who stuck around for that one magical moment right there, that was it. That was what we were looking for. We called it right off the money. And Lauriston, thanks again for this, man, because if I'm going to go down into the 5-second chart and show you this entrance right here, if you would have taken it just off the 1 minute, you would have caught that. And if we go down to the 5-second chart, where consolidation, we just ran that out here. Impulse leg down below this low. Look at that. There's your impulse leg. Come back into it. You trade off of there. You would have got that short right there, the 182. You would have got it in the same place. on the 5-second chart as you would on the 1 minute chart. And we had our 1 minute objectives, 1 minute objectives, which were quick one, take a piece off here, take a piece off here, take a piece off at these equal highs, and a last piece, take another piece off there, and leave the rest to run if you want, for a run on these lows. Or at least I would take another piece off at 50% of this range, this consolidation. So you got 10, 20, 30, 40, 50% of your trade is off, and the rest of it is moved into break, a profit. No guarantees in life, but there's a real, that was a really nice little trade. And there was just Lori and myself around to see it. Oh well. Patience, patience, that's what it is right there. That's how you got to be, committed to staring at charts, looking for any entrance. Excuse me while I have a little coughing fit here. Okay, I'm back. When you see these long drawn out from 10 o'clock, we've seen this long drawn out kind of insidious side action, and you're waiting for that impulse leg to form. We didn't get this impulse leg here and trade back to it. We didn't get an opportunity to get in on that. That was the only long that was available for whatever you could get out of it. If you're aiming for these old highs here, you get 10 handles or more out of that. But this is the stuff we were looking at. We're looking for an impulse leg, either higher or lower, to kind of tip their hat as to what they wanted to do. And then all of a sudden, bang, bang, there was the tip. Then we're saying, we were calling this as it was happening. Let's look for this fair value gap to form here, and then a return to old lows, and also into the fair value gap there, old low. You tip it right there, and that would have been a full entrance with a little to no drawdown. First exit is the fill of the fair value gap, because it could be just filling that and running. So fill 1 to equal highs we called, and then this fill here. Now 50% of this. And if you get that, then move your stop loss well into profits, because this could turn on you, and you're here to just grab as much profit as you can, or close it out. Well, do what you like. That's what I'm looking at. Usually this consolidation now, you're between these two consolidations. So if you can get back into the body of that, well, we did already. So that would be a great place to stay and exit and have a nice day. That right there was 50 handles. That's enough for your week. Now with that, I'm out of here. We could be, just so you know, you could be returning back up into breaker inside a fair value gap. Really, really high one there. Stop loss would go above for a continuation if you're looking for a run back down into that that gap created by the it's on a different chart here. Regular trading hours gap. back into here. See how we hit the high of it again? So you're between here and here. So if you end up eating through half of this, which is right from there to there, that's right off that breaker. If this fills and you lose it and you start to eat through it, then I'd say we're heading for the upside some more. But right there, you've had perfect places to unload your position on the way down. Anyway, I hope you got something out of that. I'm happy to share where I can, and thanks again, Huddleston, for this trade. Makes me see it much more clear when you use a 5-second chart to confirm. Anyway, you guys have a great day, and I will see you folks. Huddleston, you can still get in touch with me on the Skype channel, the Breakfast Club. It's still available whenever you like it. And Lee, thanks for popping in, buddy. And hopefully you got something out of that. And I will see you guys for the crazy non-farm payroll day tomorrow. And we'll see if we can do the non-farm payroll trade. Not that it will be live. It won't be live funds. But it'll be demos. See if we can do that NFP, non-farm payroll trade. So what we're going to be looking for tomorrow. So review Michael's information on non-farm payroll trade day. So when we come in tomorrow, we'll see if we can't see that setup happen. If it does, then we'll try and do a demo trade on it. And yeah, so that's what we'll do tomorrow. Have a safe day. Take care of Malaysia, my friend, and spread the love. Be kind to one another out there. It's a rough world. But there's a lot of love out there, a lot of people positive. Keep your eyes on the prize. Reject all the negativity out there. Treat people as you'd like them to treat you. And I will see you tomorrow.